Webinar of the self-directed IRA with Newview Trust Company. I'm just going to give about a minute or so to get people acquainted online and get them into the webinar for us. For those of you that don't know, we are in Central Florida, and so we do have live audience, but we also have audience via the web, and so we are available to assist clients that are all throughout the country. And so we want to make sure that people on the West Coast are joining us as well. And it's about noon here in Florida, and it is a bright and sunny day. Generally in the summertime, we don't really know if it's going to be cloudy or rainy, but when it does, it just usually does for about 10 or 15 minutes. So I'll go ahead and get started. My name is Lisa Rodriguez. I am the Director of Sales here at Newview Trust Company. I've been here a little over 3 years. I was hired right before the pandemic hit in 2020. And so a lot of experience behind the camera and also out at conferences and throughout the company. So today we'll be talking about self-directed IRAs and the intro class, needless to say, and kind of talk about what we have to offer here, different options that we have. It's not moving forward. To get started, I do want to mention that we are not tax advisors, we're not attorneys, we're not licensed in tax or any of those kind of things or investments. So this is, we are a custodian, and so we custody for alternative investments, and that's what we were purpose built for. We've been in business 20 years now. This year's our 20th anniversary. And so if you need any more in-depth information, we urge you to go seek out a tax advisor or a CPA. So one of the things that we found in an article a couple of years back in Forbes is that of all the IRAs valued over $5 million, 25% of them hold non-traditional assets, so alternative assets. So there is something that the ultra high net worth individuals do know, and that is that alternative assets pretty much belong in their portfolio, right? So they have stocks, bonds, mutual funds, but they also hold a pretty good portion of their IRAs are held in non-traditional assets. Yet only 2% of all IRA holders have non-traditional assets inside of them. So self-directed IRAs allow you to invest in non-traditional assets or your alternative assets. And that's what we're here to talk to you about today, to broaden your horizons in regards to self-directed accounts. So what is a self-directed IRA? It's not a legal term, it's more of a marketing moniker, right? So it essentially tells you that an IRA is an IRA, whether you hold it here at Newview Trust or whether you hold it at a custodian like a Schwab or a Fidelity, right? So if you have a traditional account, traditional IRA, it's the same type of IRAs and it's managed by the same rules that the IRS provides us with. It's just that it's here as a self-directed IRA, which gives you the ability to manage or facilitate that account. So like I mentioned earlier, it's an IRA, right? And there's no legal distinction. So again, it's a marketing term or something. We get a lot of time, people will call in and say, oh, I want to get a self-directed IRA, and what can I do with that? And it's kind of, you know, a little bit of an educational discussion around the fact that it's not different than anything they've already experienced other than what they invest in with us, right? So it's another way to save for retirement, make sure that you're more comfortable at that point in time, and you choose where the money goes. So think of it this way. You're the hand and we're the glove. You're going to point and say, this is what I want to invest in. And because we're the glove, we're going to help facilitate that investment for you. But we don't do any due diligence around that investment. That is the self and self-direction. That is where you are going to go ahead and you're going to choose the investment that you want to invest in. Tell us how much money you want to invest, when you want to do it, and we're going to help facilitate that process for you. So what are the benefits of self-direction? So I touched a little bit earlier, a little bit about diversification. And people will say, you know, your advisors usually will say, well, I have you diversified. I have you in stocks, I have you in bonds, I have you in, these 3 different mutual funds. And that's great. It's all public equity, right? And it's all available on the stock market, or through your advisor or through that custodian. But it's not true diversification until you're into a tangible asset, right? Or, another option that's private. Maybe you want to invest in a company before it goes public, right? So there is a difference. Or you might want to invest in a different part of the country. You might say that, diversifying your portfolio means you might want to have properties in Florida, but you might want to have some in North Carolina or in Montana, or wherever you choose. So diversification is what we think about when we think about some of the advantages of having self-directed accounts. Also, your tax savings, right? Your tax advantages. So whether that's pre-tax or post-tax advantages, right? Whether you're deferring them or whether you're saying goodbye to all of them in general. And we'll go over kind of the different accounts that can help you to do that. Also, another big advantage that we see is invest in what you know, right? So let's say that you're a realtor and you work with a lot of clients that are purchasing real estate or investors, and you help them. Well, that's a business that you know the market, the area, what might be on discount, right? You might know of a house that's being foreclosed on because somebody is telling you that, my aunt can't afford this house anymore. It might be something that you can do, is purchase that home, right? Because it's kind of what you know. Same thing, you might be a mortgage broker and you might understand mortgages and debt, and you might want to invest in notes or become the lender or the bank for someone else. So those are some of the things that we see. And then one that's not listed there that has become more popular, or more social conscious investing, right? So somebody might want to buy in an area where they want to provide more affordable housing, or in an area where they want to provide student housing or senior housing. So it might be something that they're passionate about. It might be something in regards to energy, or there's so many things that you can think about. But another avenue is what that benefit might be for self-direction. So there's 7 plans or 7 account types that we offer here at NewView. There's the traditional and the Roth IRAs. Those are your personal plans. And then we have employer plans such as the SEP, Simple, and Solo 401k. And then we have specialty plans, which are education savings accounts and health savings accounts. And we'll kind of go a little bit further into this, but this is your contribution limits as of 2023. They do change, usually a couple hundred or maybe $1,000 from year to year. So always keep that in the back of your mind. But these are the contribution limits for this year. And then we'll go into some of those accounts. And here we go. So these are the personal plans. So a lot of people, about 70% of the population have traditional funds, right? Traditional IRAs, or their 401ks through work are traditional dollars, right? Pre-tax dollars. They get a deduction when they do their taxes if they choose to save for their retirement through traditional methods. And so that's about 70% of the population. And then there's about 30% of the population that has Roth or post-tax dollars for their retirement. And many will say, obviously, that the Roth is better because you pay the taxes now, and you don't have to pay the taxes later. And that's true for many. And then that could not be true for some, right? So it just depends on how they manage their money, how you set up, going forward with your CPA and with your your retirement plans. But in general, the Roth is really, where people want to be, right? They want to pay the taxes now so that they don't have to pay the taxes later. And with the Roth, as long as you have the Roth for longer than 5 years and you're over the age of 59 and a half, you can take qualified distributions completely tax-free. So that's a huge advantage, and that is, why the Roth is pushed so heavily for people to take advantage of those tax benefits. On the traditional side, you're getting the tax-deductible contributions that we talked about. There's no income limitations for traditional IRAs. And there are some on the Roth side, right? So if you're a high income earner, you may have some challenges with getting into a Roth directly, but there are ways that you can go ahead and create a traditional IRA and then convert that to a Roth. So back in 2010, legislation came into play where you can convert that, and you can convert either a portion of a traditional every year. If you want to do that, you can pay the taxes on that, or you can convert it in its entirety. Again, a conversation you want to have with your tax advisor to see what's best for you on that. So these are our employer plans. The solo 401k is a plan that we see a lot with realtors, consultants, people that don't have any employees, right? So this affords for automatic checkbook control, so you have access to checks and writing checks for that plan. You also have larger contribution limits with a Roth component, right? So I think it's $22,500 that you can contribute as the employee deferral for and it's Roth eligible. So this is probably, you know, one of the largest Roth contributions that you can make is through your solo 401k. And it also has some exemption to what we call a UDFI tax, which is an unrelated debt finance income tax if you take some loans alongside your IRA. So those are the benefits of the solo. We also offer the simple IRA. That's generally for businesses that have less than 100 employees. And it's kind of a mixture of an IRA and a solo. So definitely a plan that you want to learn about. And then on the SEP IRA side, again, you do have to be working in that business for 3 out of the last 5 years, but they all have advantages. They all have higher contribution limits than your traditional or your Roth IRAs, but absolutely something you want to consider if you're self-employed. And then these are your specialty plans. So these are what we would call like bolt-on plans, right? So you may have an account with NewView already, or you may be considering bringing over some money and opening a Roth or a traditional account with us. But this is also other account types that we offer that you might not have thought of that you may be able to participate in. So the HSA, if you have a high deductible health plan, is something that you may be able to consider opening an account with us. Many people don't know that you can invest with these funds, and so I'm here to tell you that yes, you can, and you can self-direct them through NewView. So those are, you know, what I really love about the HSA is it's tax deductible going in, and it's tax-free coming out for qualified distributions. So it's kind of a mixture of the traditional and the Roth, and you're getting benefits on both sides. So that's really important about the health savings account. And then Coverdale Education Savings Account, you can contribute $2,000 a year. And actually you can do it throughout the child's journey. And the thing that makes it a little bit different, like 529 plans are good, and you know, prepaid college plans are good. But those plans usually are limited to more secondary education, right? Post-secondary education. Whereas the Coverdale can help pay private school, you know, middle school, elementary, those kind of expenses. So just something, again, these are bolt-ons. You can partner your traditional with your HSA, with your ESAs, and you know, grow your retirement income or these accounts tax deferred, tax free, depending on how you do it. So wanted to make sure we mentioned those. So what types of plans can be self-directed? Well, I just mentioned all the 7 that we have to offer here, right? And I do also want to mention that we do have on our YouTube channels and via webinars, podcasts, that you can learn more about these account types individually. You can search through our content for those. So if you really want to get more in depth in that, we're happy to have you go check through YouTube or schedule calls with us. So what are my restrictions with a self-directed IRA, right? What are your restrictions? What kind of transactions can you participate in or not participate in? And what are my investment restrictions? So there's 2 things that the IRS says you cannot do in your IRA. And that is have collectibles or life insurance in your IRA, right? So I kind of think about this with my kids, right? My kids play basketball. And, you know, the referee's there and they're watching, you know, did they go out of lines? Did they foul somebody? And, you know, they only blow the whistle, right, when somebody does something wrong, right? And I think about that too. It's a little bit different, right? IRS says, we're not going to tell you everything you can do. We're going to tell you everything you can't do. And the 2 things you cannot do are buy life insurance or collectibles. Collectibles are just very difficult to monetize, right? I might say this painting's worth 50,000, and at the end of the day, it might be worth 50 million, and I'm here evading taxes, right? Or vice versa. So, it's difficult, and that's why I believe that the IRS does not want to do that. And then life insurance was created for after death, right? And this is really to create retirement. So, those are the restrictions as far as what you can choose to invest in. I mean, we've seen some pretty amazing investments, racehorse, ATM machines, all kind of things. But this tells you basically what you can't do. And then there are parties that you cannot do business with your IRA. And I know this looks super confusing, so I'm going to sum it up here for you so you don't have to read every single box there. But basically, your lineal ascendants and your lineal descendants are people that are prohibited to do transactions with your IRA. So parents, grandparents, kids, grandkids, spouses of any of those individuals, and then companies that are owned, controlled, managed, or you're highly compensated by any of those individuals that I mentioned, yourself or your spouse, right? So that kind of breaks down the people that you can't do business or shouldn't do business with unless you want, problems from the IRS. But think of all the people that I didn't mention and all of the opportunity that's out there that is not restricted. And I didn't say brothers, sisters, cousins, aunts, uncles, right? So you can still do business with them. Just make sure you're not creating any sweetheart deals and anything that the IRS is going to come knocking and say, that doesn't really smell right, right? So if you wouldn't do that same deal for a stranger, then you probably shouldn't do that for your family member, right? So that kind of sums up, that slide. It looks a little, crazy, but makes it easy when you go through it through a class like this. And then I want to talk about some of the asset classes that people use when they invest with their self-directed IRAs, right? So real estate is probably one of our largest asset classes here at NewView. I mean, there's three really, strong ones that we have here. One is real estate, the other is notes, and we'll get into that. And the other is private equity, right? So real estate, when people think real estate, a lot of times they think single family home. But there is a vast opportunity when you think about real estate. Could be land, could be multifamily, right? Could be self-storage, very popular in the last couple of years. Could be syndications, right? So people syndicate real estate, or they raise capital, and they'll say, we're going to do this $20 million deal. We're going to buy a hotel in South Florida, and it's going to be amazing. And we are taking IRA money, but we're also taking, regular retirement or any type of investment that somebody wants to do. But they may say, we will accept IRA money, and many do. And that's how they get their capital raises so quickly and get them fulfilled, right? So you may be looking not just as a physical, tangible piece of real estate, but you may be looking at a fund that owns a tangible piece of real estate. And so that's what syndications are there. But it could be land, it could be people use their IRAs to purchase tax liens, right? So they'll go to the courthouse steps and they'll be there and they'll auction off the different tax liens. So we have clients that do all of the above and more. So, but just wanted to kind of run through different options for you, things you may not have thought about. Private equity, so again, basically it could be that they're purchasing real estate or equity into a business, right? But they just package it through an LLC, a trust, a joint venture, limited partnership. So just depends on how it's packaged, but again, same concept, probably some of the same assets that you're seeing outside of these private equities, but think about it, you can get all types of public equities, right, on the stock market. Well, these would be privately owned or privately syndicated. Promissory notes. So this is probably the other third, right? So promissory notes could be where you're going to be the bank for someone, right? So maybe you have a friend that you see they flip houses on and on every couple of months. You're seeing that they do a lot of flips, and maybe you want to help them finance those flips, right? So you're being a passive investor, or in the sense that you're loaning the money to them. They're going to pay you back at a certain time frame at a certain interest. And then, you can secure the loan with the home and all kind of things. So we see a lot of that. We see a lot of debentures. We see, convertible notes or secured loans, unsecured loans, a lot run through this office. But just to give you an idea, Promissory notes are very popular, especially in a high interest rate environment. So, steps to purchase an asset in your IRA. Basically, you could come here and open an account with NewView. We'd love for you to do that. And then funding your account. And I'm going to spend some time here because this is the step that usually has a lot of questions around it, right? So how do I get my money from point A to point B? What's the best way to do that? What is it called, right? So funding your account comes one of three ways. One is via contribution, right? So this is your first time ever that you're going to have an IRA and you want to do a Roth because you heard such great things about it and how that's tax-free after the fact. And so you bring over your $6,500, you make a contribution to that. We set up the account, you can start investing in tax liens, cryptocurrency, whatever it is that you want to invest in, right? That is making a contribution. Second way to do it is by transferring money from another IRA custodian to NewView, right? So let's say that you had a job you retired from 10 years ago, you've got this chunk of money sitting in an IRA because it went from a 401k to an IRA, now it's sitting in this IRA and you have $2 million there and you want to move over $500,000 to NewView. You can do that. You can also bring all $2 million over if you want to. But transferring that money over is as easy as completing a form. And we here at NewView would oversee that, send it to the contra custodian, get them to send the money back over to us. Process usually takes about 7 to 10 days. Can be quicker, can take longer, depends on the contra custodian in many cases. But we do facilitate that for you to make it as easy as possible. And the third way to do that is via rollover, right? So rollover means that, let's say, during COVID, I got laid off and I have this 401k sitting there and I haven't done anything with it. So I call my plan administrator and say, hey, I want to start doing self-direction and I want to move that money over to NewView Trust. That's a rollover. So you, as the plan participant or as the person that used to work there, facilitate that. And you just fill out some paperwork for us so we know where the money comes from in case the IRS comes knocking and says, where did so-and-so get this money from, right? So those are the three ways that you can fund your account. Again, making a contribution, transferring, and rolling funds over. And then you do your due diligence and you find your investment. Maybe you're part of the local real estate investment association and you network with other investors, or you find things online, or you have a friend of a friend that does this and you want to invest in that. So again, you are the hand, we're the glove. You're going to tell us this is what I want to invest in, and we're going to help facilitate that process for you. So you complete what's called the purchase authorization form, and you tell us how much, what you're getting out of it, where it's going to go, and what date you want to go ahead and fund that transaction or that investment. And then that's what we do. So those are the 5 steps there on the screen. Some of the key points that I want you to remember about what we talked about is self-directed IRAs allow the account holder to choose your investment. That's the most important, right? So NewView is built on more choices, more control. So for people that like that, we're the best place for you, right? If you don't like that, you can learn to maybe be more open-minded to that or want more choices, more control. But really, truly, we want to make sure that you have the choices, you have the control, you can choose your retirement destiny, as we say. You can get out of the Wall Street and into Main Street, right? So you can physically see what you're investing in if you want to do that. IRAs can own real estate or loan money secured by real estate, yes. Sometimes we get questions about, I may not have a lot of money in my IRA. Maybe I only have $20,000 in my IRA. What can I do? People don't know that you can have a non-recourse loan alongside your IRA and purchase things. So that is something that's available. Again, I urge you to go to our YouTube site and search some information there so you can learn that, or you can partner with other IRAs or partner with other people to increase that. IRAs are a great source of profits and capital. Again, partnering with each other, if you're raising capital, you want to do this deal, but you need, another $500,000, finding other people that they may say, I'd love that deal, but I don't have the money. Well, do you have it in an IRA? Do you have it in a 401k? So other ways to help with that. Be mindful of the prohibited transaction rules. One of the things that I failed to mention when we were going over that is you're also not allowed to have sweat equity. So if you buy a house and it needs some fixing up, right, you're going to hire subcontractors and contractors to do that. You can't physically go in there and say, I'm going to paint that house, right, or I'm going to install the flooring in that house, because you're getting too close for comfort. The IRA is not to benefit you today personally for anything, right? It's only for your retirement. So just keep that in mind. There are rules around that. IRAs and 401ks and other qualified plans can own any asset, right? So we talked about what you can own. We went over the different asset classes, but there are so many more, right? So the two things that you can't buy are the collectibles and the life insurance, which we want to make sure that everybody understands those rules. And then if you are interested in having conversations with our IRA specialists, we urge you to go ahead and scan that QR code. That will help you to create a meeting with one of our IRA specialists or a consultation to kind of run through what your thoughts are, your ideas, any questions you still may have. And then you can complete application with them. You know, they can tell you about your contributions or your transfers, etc. And then lastly, what I'd like to share or what I'd like to ask is that everybody subscribe to New View Trust on our newsletters, on YouTube. This helps get our information out there, helps you to have access to resources for future opportunities, webinars, classes, investment information. But we thank you for your time today. I want to know if anybody has any questions.
We have a couple online.
Okay.
Jeffrey wanted to know, how does he know if he qualifies for a solo QRP?
So finding out if you qualify for a solo QRP was a question that we had from Jeffrey. Thank you. And so generally speaking, the qualifications for the solo are to be self-employed and have no common law employees. So you have to have self-employment income. Again, we're happy to discuss more about you particularly or your business particularly. So go ahead and set up a call, and because you may tell us about one business, but you might own 3 other we don't know about, right? So, but those are the general rules around the solo 401k.
And Sylvia wanted to know, can I transfer my current retirement funds to New View?
Absolutely. So again, depending on how that money would come over, whether it would be a transfer or a rollover, right? We can talk through that with you. If you want to set up a call, or basically, I'll reiterate the fact that if it's a transfer, we facilitate that. If it's a rollover, you would facilitate that. But the key is to get the account opened so that we can have somewhere to bring that to ahead of time. So just let us know how we can help you, and we'll help you get that money over.
Those are all the questions from online.
Okay. Well, thank you so much for your time today again. I hope I provided some additional education for you. And if you need anything, please don't hesitate to give us a call and follow us on YouTube and LinkedIn.